Top Tech Stocks 2021. Gadget producers, software developers, cellular carriers, streaming services, semiconductor firms, and cloud computing providers, to mention a few, are all part of the technology industry. The tech sector includes any firm that provides a product or service that is highly integrated with technology. Customers pay a subscription to a program rather than a one-time license, as software businesses increasingly move to a software-as-a-service model. The software business receives regular income as a result of this. Semiconductors are the brains behind all of that gear. Companies that make semiconductors design and produce central processing units, graphics processing units, memory chips, and a range of other chips that are used in today's electronics. Wireless telecommunications businesses are part of the technology industry. The cloud computing providers that enable such streaming services, and the video streaming businesses that give simple access to high-quality material are also in this category. The best tech stocks. Many of the most valuable companies in the world are technology companies. Amazon.com, Nasdaq, AMZN, is the world's largest online store and cloud computing infrastructure provider. Jeff Bezos, the business's founder and CEO, will step down later this year, ushering in a new era for the corporation. Microsoft, Nasdaq, MSFT, is a well-known software firm well recognized for its Windows PC operating system and Office productivity suite. Microsoft is also the second largest cloud infrastructure provider, after only Amazon. Apple, Nasdaq, AAPL, is the company behind the iPhone, iPod, and Mac computers. Customer loyalty is high, and Apple's environment is becoming increasingly sticky thanks to a rising number of services. Intel, Nasdaq, INTC, is one of the world's largest semiconductor businesses. Intel creates CPUs for personal computers and servers and specialized processors for applications such as artificial intelligence. Cisco Systems, Nasdaq, CSCO, is the leading manufacturer of enterprise networking hardware, which serves as the Internet's backbone. Netflix, Nasdaq, NFLX, is the undisputed king of the video streaming market, spending billions of dollars on programming each year to keep its ever-increasing user base enthralled. Facebook, Nasdaq, FB, with about 2 billion daily active users across Facebook, Integra, Messenger, and WhatsApp, is the largest social networking corporation. Alphabet, Nasdaq, GOOG, Nasdaq, GOOGL, is the parent corporation of Google, the world's most popular search engine, and the Android smartphone operating system. Snowflake, Snowflake is a rising star in the field of cloud data management. Design Snowflake to be cloud native, allowing a company to handle all of its data quickly and securely in one place. Data analysis, transfers, authorization management, and more are all made simple in the ecosystem. To put it another way, Snowflake is replacing complex and frequently redundant on-premise systems with a unified cloud solution. Last year, the firm went public for the first time, and it was one of the largest IPOs ever at the time. The stock then rocketed upward, but it has subsequently fallen 50% from its highs. While the stock price has dropped, the firm continues to grow. Revenues increased by more than 100% year-over-year in the last quarter, making it one of the fastest-growing software companies in the world. Frank Solomon, the company's CEO, is a computer industry legend who previously managed ServiceNow for many years. Snowflake should lead the comeback in cloud services equities when demand returns. The FAANG stocks, Facebook, Amazon, Apple, Netflix, and Alphabet, Google, are frequently clubbed together. These firms are leaders in their fields, and their stock prices have risen dramatically in recent years. Impact of COVID on tech stocks. Because of the epidemic, Americans were faced with a whole new set of technological requirements. Many tech businesses stepped up to meet such difficulties, resulting in essentially good outcomes for the tech industry throughout the pandemic period. Even while competitors like Walmart, NYSE, WMT, and Target, NYSE, TGT, stepped up their e-commerce efforts, Amazon has flourished. In the first quarter of 2021, Amazon increased overall revenues by 44% to $108.5 billion. A remarkable achievement for such a huge corporation. As individuals spend more time at home, demand for collaboration software, gadgets, gaming, and cloud computing services has boosted Microsoft's performance. PC sales remained exceptionally high at the start of 2021, assisting Microsoft in several ways. Microsoft's sales increased 19%, and its net income rose 44% in the most recent quarter. While it was uncertain how Apple's expensive equipment would do early in the epidemic, people are already scooping them up. In the most recent quarter, sales of everything the firm manufactures increased significantly, with the core iPhone business growing by 66%. How to analyze tech stocks? The price-to-earnings ratio is a helpful indicator for mature IT businesses that generate profits. When you multiply the stock price by the earnings per share, you obtain a multiple that indicates how highly the market values the company's current earnings. The greater the multiple, the more the market considers future profits growth to be valuable. Because many IT firms aren't profitable, the price-to-earnings ratio can't be used to assess them. For these younger businesses, revenue growth is more important. If you're investing in something new, you want to make sure it has a good chance of succeeding. It's also critical for underperforming IT firms to shift their bottom line from losses to profits. As a business expands, it should become more efficient, particularly in terms of the sales and marketing expenditures required to clinch agreements. In the end, a good tech stock trades at a fair price for its growth potential. The problematic aspect is accurately determining such growth possibilities. Paying a premium for a company might make sense if you predict earnings to rise in the future years. One approach to avoid making mistakes is to invest in a technology-focused exchange-traded fund. One alternative is the ARK Innovation ETF, NICENT, ARKK. However, the fund's bets on high-flying tech firms may end up being riskier than investing in the tech titans named above. Investing in technology companies can be hazardous, but you can mitigate your risk by only doing so when you're confident in their development potential.